there's this optimism among some of the more bullish sell-side economists that we're going to have a first quarter turnaround based upon the property stimulus and the COVID reopening. But I don't think the property stimulus is going to make a big impact due to a lack of demand and optimism among consumers. And on the COVID side, you can't have a huge per capita death rate and people with COVID and recovering from COVID and expect some of the supply chain problems to reverse, as we've seen with the Apple is now saying they're having difficulties and Foxconn and so forth. So I'm fairly sure that we're going to have to wait till second half of 2023 before we see some leveling out, not even just growth, but leveling out of the economic situation.
Andrew, it's Richard in the Hong Kong studio. What's been interesting is we've seen this big policy shift from lockdown to no lockdown. What do you think the next policy moves are going to be? Will the government start to stimulate the economy? What are they going to say in terms of how things have moved from here? Because that's really what investors are looking at. We're looking for some guide as to where the policymakers are going to go next.
Well, given the vacillating policy from lockdown to opening up, which made no sense to me whatsoever, looking for guidance from the central government at this point may be a kind of a lost cause. We've had the stimulus package in November, which so far has proved to be inadequate, and the central government is clearly concerned about inflating the property bubble again. So I'm not looking for too much guidance on that side. The question really is going to be how they're going to allocate the costs of the hospital care and so forth, medical care during the COVID situation, and what does that mean for local government financing that are trying to get their economies going. And I think that's a real problem, given that local governments are running deficits of approximately 8%, about double or triple what they were a couple of years ago. So what the central government is likely to do is, first of all, blame other forces for the death rate, either foreign forces or bad implementation by local governments. Then they'll try to provide a certain amount of stimulus to the state sector, because that tends to be where they aim their firepower through the banking system. But the real problem is going to be the small businesses, the SMEs, which are hugely important to exports and for employment. And the central government has been terrible about allocating credit to them. So I'm concerned that that's going to have a big impact on economic growth next year.